Markets missed their mark on Friday, and the signals couldn't be clearer. Welcome to our weekly strategy and market digest by Investing Angles, where every candle speaks and every Elliott Wave whispers the next move. This week we break down volatility, a rare set of epic precision failures. What do the candles forecast now? US dollar, solidifying a bottom and quietly gaining momentum. Bond yields and TLT, bottoms are in. Is it time to brace for a wave of downside? Dollar yen, dollar trends confirmed with clean technicals behind it. Baltic Dry Index, a bearish tilt paints a gloomy outlook for global trade. SP 500, Nasdaq, Dow, and Russell, multi-angle breakdowns and updated roadmaps. Features of the day, Amazon and Google. Are these rallies strong or just shiny traps? Let's chart the real picture while the crowd is still reacting to headlines. And we start our strategy section with the Volatility Index, as usual. Today, we had an epic move by Volatility Index on the daily frame. Just a few minutes before the closure, the index was bearish. And the candle here was below the yesterday's low. But something happened and it was pushed just 1 basis point above the low of yesterday. And from candle's perspective, this is huge. This could be a very strong reversal candle. Technically, this candle now becomes an inside one, and it is the straight path towards potential reversal. If we have a strong confirmation in the next day or two, this would be it. The similar situation happened with the futures, which also closed a few basis points just above the yesterday's low. Now, if we look at the weekly frame, no changes here, absolutely not. The odds remain bullish. So for 5 weeks in a row, volatility failed to close below this big green candle. Volatility, and the same happened for the futures. So this is a bullish formation, potentially a rising three methods. Let's see how it plays the next week, and especially considering the daily closure, but the odds are bullish right now on the daily and the weekly frames. And this is our Elliott Wave chart. I'd like to say again that Elliott Wave is not the best tool for forecasting volatility index. However, it is very useful for calculating certain moves. And I am tracking this just for this. So I am seeing a potential flag being developed down, which morphed into an ending diagonal, and right now it's almost a horizontal move. Once it's complete and certain technical indicators suggesting this move, we would be looking for a very strong target, a very strong move upward. Considering that this wave, the entire wave, is a diagonal, then we would be looking for a return towards at least 53, 55, maybe higher. That's volatility. Remember, volatility is bullish for the next week. Now let's talk about the bond market. So if we look at the 2, 5, 10, 20, and 30 years yields, they all closed the day on Friday with bullish candles, and these are practically the continuation ones, and we are seeing very interesting flip here, 8 by 20 EMA bearish cross and bullish cross, pardon, for 2 years and for 5 years. So for 10 years, 20 and 30, it happened a while ago, 2 weeks ago, but nevertheless, and right now it is expanding. So the chances for a move higher for the next week are very significant. If we look at the bigger frames, this is the 10-year yield. We are seeing also a cross here, which happened 2 days ago. And the weekly candle is marginally bullish, so technically it's almost almost completed a reversal here on this on the three candles, but considering this big one, the odds are bullish. And on Thursday we had a closure of 8-day frame, which is currently bullish, and a freshly made bullish cross emphasizes the strength of the momentum. So we are looking for bullish continuation for higher rates this month and probably beyond. If we look at the 20-year yield micro chart, this is what we are looking for. This is an impulse of the bottom in April, wave 2, potentially ending as a diagonal, a strong move up, corrective wave 2, and now we would be looking for wave 3. If everything goes well, then we would be expecting rates rallying towards 5.7, maybe even 6 in the May-June time frame. That would be a very interesting scenario. Now let's have a look at the bigger chart, the one that we are tracking since December 2022. No changes here, so we are still expecting the rates to move higher, and there is a significant technical support for this. If you're interested in looking looking into our statistical and technical evaluations, you're welcome to visit our website investingangles.com. By the way, for those who want more than just a video, our ultimate subscription includes full written access to market setups, wave charts, and high-level strategy across all major instruments. If you are serious about timing and signals, this is where to go. Email us at help@investingangles.com, let us know your country, and we'll send you a custom discounted offer. Now let's have a look at the next chart, and this is sorry, what was this is TLT. Yes, absolutely. So I was doing some analysis here. So this is TLT closure. On the daily frame, we are seeing potentially bullish Harami. However, the technical support is somewhat weak on this, and even if we see an attempt to bounce here, the odds are right now bearish, mostly bearish. And the very strong 8-day closure with a continuation, bearish continuation candle, and also the weekly frame made a bearish candle, potentially moving lower. Now if you look at the TLT microchart, this is what we've been tracking since April 7th for over a month, when we said that this wave doesn't look good. It was indeed impulsive, and after that we had a corrective wave, potentially 2, and now a very strong move down, potentially expanding into an impulse of a larger degree. So that's our perspective for the short term. Now let's have a look at the spread. So this is the candlestick perspective, and I would like to say that the odds, bearish odds that we started discussing a few weeks ago, when we saw very strong bearish candles on the 2-day frame, 3-day frame, weekly, now they expanded into the bigger frame. This is the 8-day frame closure on Thursday, and it closed with a very strong bearish engulfing candle over a spinning top. Potentially now we had an open path downward, and this is what it would mean from Elliott Wave perspective. So we are here building a solid top. The wave here is not an impulsive wave, it breaks as a diagonal right now, and if it is indeed a diagonal, then we should be preparing ourselves for negative spread in the next couple of months. So that's the perspective. And the final discussion in the bond market section, I have a little warning for my friends from Canada. So what we are having here is a bullish reversal candle, bullish engulfing on the monthly frame. So if it is confirmed in May, then what I would say, we have a very good chance to start moving higher. By the way, this chart was made in June 2024 when I was expecting a move down here. And after that, I would be looking for higher rates. This is for 5-year yield. So the chart practically remains the same. Now we have potentially a very strong bottoming pattern, something that we haven't seen since March 2020. And if we see a repeated move like this, well, that would be either wave C or wave 3 of a larger impulse. Well, that wraps up our discussion on the bonds, and now let's move on to the next chapter. It's dollar index. So dollar index is gaining strength, this is undoubtedly, and what we are seeing here is practically it's a 3 white soldiers on the weekly frame, and today's candle closed nicely above the high of the red candle, so technically this bottom is confirmed on the weekly frame. However, I would be looking for a stronger confirmation. At least we'll see. I'd like to see it's climbing above 8 weeks moving average. But nevertheless, candles are usually the first to tell us the story. And on the daily frame, we have a very strong reversal in the middle of the week, and Friday's candle is most likely just a continuation one, just a posing before moving higher. And I'd like to say that this move is very strongly supported by multiple technicals. From the Elliott Wave perspective, and also from the classical patterns perspective, this might be just a bullish flag that dollar index completed or about to complete. There is still a chance of quick lower low before bouncing up, and we've been tracking this for a while. So this was when this was, it was at the end of March when we said that this is going to be down toward this rectangle, and now we can see that dollar is right in the middle, has been right in the middle of this target. Well, once the bottom is confirmed on the larger frames, we would be looking for a big move, and this move would be looking something like this. So this is our flag, multi-year flag that potentially completed here. This would be wave 4, and wave 5 towards 113, 120 would be not a surprise. Well, that's all about the dollar. Now let's talk about yen. So a few members suggested that we included yen into our strategy discussions on a regular basis, and this is what we are doing. Let's have a look. From the candles perspective, everything looks very nicely bullish for dollar. This is a strong daily reversal with an 8x20 MA bullish cross, opposing candle. Right now it is sitting just below the 50 days moving average, but something tells that this is gonna be moving above this line. On the weekly frame, it's not as strong as the dollar one that we just saw, but anyway, this is a bullish formation. And just to confirm this hypothesis on the 8-day frame, during this week, dollar yen pair formed a strong bullish engulfing on the 8-day frame, which is stronger than the weekly. And this one, just for a reference here, this is a 12-month frame annual. And in our annual review in January, I mentioned that the dollar is bullish against yen, and it is going to go higher. So now we see it backtested the 50 years moving average, and if it goes from here upward, this would be absolutely normal. And now let's have a look at some technicals. This is an interesting chart. So this is the 2 months frame, and the monthly. So the monthly is clearly bullish. We have 50 months, 100 months, and 200 months all pointing upward. If we look at the 2 months frame, that's an interesting. So we can see a very strong bullish cross here, 50 over 200. And now the next cross is going to happen in the next couple of months. It will be 100 over 200, but this is 2 months chart, so it's going to be 200 months over 400 months. Well, and this is an interesting development. If we look at the even bigger chart, this is a quarterly. Now we are seeing that the 50 quarters moving average almost vertically crossed the 100 quarters moving average and is moving towards the 200. The interesting thing that this never happened before, and this is the all-time chart that I have from 1971, and these lines were always moving down, but now they are curling up, and this is a very interesting perspective. So does it mean that we would never see dollar to yen at 140, 130 or 100? Never again? Maybe that's a possibility. Let's see. And now another perspective. So this is a MACD bearish cross on the 3-day frame. Pardon, not bearish, bullish. Bullish cross on the 3-day frame. And technically it is very similar to what dollar yen formed in September 2024, after which dollar rallied about 13-14%. So if I'd like to say that this is very technically similar. So if we are looking for somewhat similar here, and we project the price here, that would be interesting. So dollar would be looking for 160 in the next couple of weeks or maybe months. So just keep in mind, take a note. This is the perspective, and this is the chart, Elliott Wave chart, that we've been tracking for quite a while, since November 2023. So the chart remains practically the same. The only adjustment is slight change in the slope. Well, so 203, 174, the same target. I think that dollar is completing 1, 2, 3, 4, an impulsive wave within the wave 3 of a cycle. Well, that's the perspective. Nothing changes, and I would be looking for a move higher, considering all technicals. And by the way, if we look, just look, so 13% would be somewhere here, right? So, but in our case, we might see a move higher. However, let's see what happens after yen, after dollar moves up here. So we might see a consolidation for another few waves for wave 4 before moving higher. Forecasting wave 4 is very difficult subject, very difficult thing. So let's see how it develops over the next couple of months. And the final discussion in our strategy section, I'd like to talk about the Baltic Dry Index. So someone says it's not forecastable at all. Well, that's our perspective. This is the candles, and we are seeing that after administration started discussion on tariffs, the main Baltic Dry Index started to move down, and right now it tried to recover, but it looks like today's candle, today's weekly candle, will put a big stop on it, and we would be looking for a further decline. And indeed, if we look at the monthly closure was with a strong dark cloud cover, or dark cloud cover, most likely it's a Harami candle. And if we see a very strong confirmation in May, well, that would be a reversal going down potentially below the 1,000 and even lower. On the 2 months frame, it was a strong failure, by the way, and now these two candles were just bearish. Now we are looking for the next move down. And this is something that nobody else forecasted. I am pretty sure about it. This is the BDI index that we did in December 2023, and this was our projected chart based on certain technical analysis, certain candles, and some assumptions from Elliott Wave. So this is the same chart right now. We are seeing that it formed an impulse down, most likely triangle here, another impulse, and we are looking for wave C somewhere here. So potentially Baltic Dry Index could hit an all-time low with this momentum. Let's see what happens. So that wraps up our strategy section. Let's move on to the stock market. For stock market, let's start with Russell. But before we dive in, I have an ask. If you're finding value in these videos and want full access to our written market coverage, Elliott Waves, technical setups, and macro updates across all major assets, check out our ultimate package on our website. It's like having your own financial newspaper, but focused and noise-free. For new members, reach out to us at help@investingangles.com. Tell us your country and we will tailor a discounted offer for you. Now let's talk candles for Russell. The closure on Friday was extremely informational and on multiple frames at the same time. First of all, on the daily frame, we see a strong bearish candle. Technically, it's bearish. It's called a Harami Cross. And if we see a strong confirmation on Monday, closing below Thursday low, it would be a big move. To add to the bearish side of Russell, this is the 3-day closure, which also happened on Friday. I'd like to say that this candle, the Friday's candle, closed just 0.3 basis points, or technically 30 basis points below the high of the previous candle. It tried to negate this hammer, or some call it a gravestone doji, but it couldn't, and it could be very critical moment. So if we see a very strong move downward, the red candle, it would be huge. And I'd like to say that this technical failure was also a failure to negate the purple circled advanced block, and as a result we have 8 green candles in a row, which is a technical stretch from candles perspective. We might see a candle or two higher, but I think that the big chance that we will see a reversal, and maybe not a reversal, but at least a significant pullback. And if we look at the weekly frame, we have 5 candles right now, and these candles were not able to overcome the strengths of this red candle before. So 5 weeks. Let's see. Well, the odds are getting more and more bearish on the weekly frame, and the same the candle itself with the weekly one, it also failed to close at a new higher high for comparing to the previous weekly, and it's also a concern. So we have 2 soft bearish messages here. If it is confirmed next week, well, we might prepare ourselves for a continued write down. Now let's have a look at Elliott waves. This is the wave that we've been tracking for a while. This is the beginning of it in February, and when we said that this is going to be a big decline towards 1950 or maybe lower, and this is exactly what happened so far, and even the wave has been followed here. And now on April 6th, we said that this time for a bottom and a move higher. And at this point, we were saying that it could be either the red path or the blue one, a continuation and extension of an initial impulse. So far, this is happening, and I'd like to say that this wave that Russell built so far has been more corrective than impulsive. And while I'm still keeping this potential green path 1, 2, and potentially this could be wave 3 here. However, it's not of high probability right now. Most likely this is an ABC correction of a bigger wave, either A or wave 4. If you see a strong move downward here, especially if it is impulsive one, this would be a very big concern, because this would be an extension for or the final wave of the top. Well, however, at this point, it's both red and blue paths are with highest probability. Now let's move on to the next index, and we will talk about Nasdaq. So Nasdaq did practically the same, but slightly worse. So what happened on Thursday? It was a very undecisive doji with a lot of bearish tilt, but right now on Friday the index formed a bearish engulfing, which is a very strong bearish message. If we see a confirmation, technically any red candle moving down, this would be a reversal pattern. And on the 2-day frame, Nasdaq also formed a very bearish doji, I would say. If it's not negated immediately in the next 2 days, then it could be a topping one. And for the weekly frame, Nasdaq wasn't able to close above the high of the previous candle. So right now it's kind of neutral, slightly bullish, but we need to see a strong move next week. And another concern that on Monday we're going to see a very strong candle closure on 10 or 15 days, which would be very critical for the next move. Now let's have a look at some technicals. So this is MACD crosses that are currently unfolding for Nasdaq. This is 50-day one, which we called on March 8th. This was our initial chart when we said that Nasdaq had all chances to revisit 13,000, pardon. And so far it already tried it midway here, then bounced. Now we are looking for a continued move down. So this is the technical thing. And since then, Nasdaq escalated this on the monthly frame, and it's been already 2 months with this cross. May is the third one. So if we see a continuation here, then it will be a very strong move down. And these crosses are not easy to reverse, and this one, I'd like to say it's been of a record magnitude. And you know what happened in year 2022 when we had we have a smaller cross. Well, that's the technical perspective, one of the technical perspective that we are monitoring. Let's move on to the next chart. This is the long-term perspective for Nasdaq, the chart that we've been tracking since November, when we said that Nasdaq was about to start forming a bottom, a top, and now it's we have wave A, potentially wave A completed. Now we have a corrective wave B, which could be much more complex. For example, something like this. So this would be wave B itself, maybe a bigger one. And after this, I would be looking for wave C. And this is 13,000 that we projected using our technical statistics. Well, moving to the next chart, this is the short-term frame. What we can see here is that Nasdaq has been forming a corrective wave upward, A, B, C, and potentially this is A, B, and the wave C of a bigger B. And this wave so far has been corrective, lots of overlaps, and I'm thinking about it as an ending diagonal, expanding ending diagonal for wave C. If this hypothesis is confirmed in the next couple of days, then we would be looking for a quick return toward the level of origin for the diagonal, which is 17.7K. And from the longer term perspective, this could be either immediate reaction and a move for wave C in red, or if the wave is corrective, most likely it's going to be an extended corrective flat for wave B. Now let's have a look at the micro chart. So this is one I wanted to discuss with you. So this was the Thursday's move here. This is potential top, potential. However, nothing is confirmed yet. So if this is a top, and let's mark it here. So potential top, and we can see an impulse downward. So this is an impulsive wave, and after that, we are looking for a correction. So far, this correction has been quite complex, and there are two possibilities I would be looking right now. So this is wave A, wave B, and potentially would be wave C somewhere here. So far, I'd like to say that this wave, the last wave I'm talking about, this one, is not an impulsive one. Too many overlaps, no clear pattern. So this could potentially be an ending diagonal for wave C. And if we see a spike, let's say, or opening right here with a gap and a strong move down, this would be a completion of this an ABC wave, which could be wave B or wave 2 for the impulse that Nasdaq formed first. So this is potentially wave 1, or it could be also wave A of a corrective one, right? So if this is the case, then this one here would be the end of wave 2 or wave B. That's the possibility right now. And so far, I'm not seeing an impulsive, would like to emphasize, I'm not seeing an impulsive wave upward. This could be leading diagonal, but given the bigger structure, I think this is more like an ending diagonal for either wave 2 or wave B. Let's see how it opens today. This is the futures, and we would be looking for an interesting path. And definitely we will update it tomorrow. Now let's move on to the next index, and we will talk about Dow Jones and Dow Jones Transportation Indices. If we look at the candles, practically Dow Jones is in the same boat as Nasdaq. After a doji on Thursday, it formed a bearish engulfing on Friday. So just to make things worse, we have a looming 100 over 200 days moving average cross, which is also known as a death cross. If it happens in the next couple of days, we would be looking for a strong push down for the index. The weekly frame, very similar to what we discussed for Russell. So we have 5 weeks, and there was no clear confirmation of the bottom yet. So for doing this, Dow Jones needs to close above this level to confirm and to form a solid bottom on the weekly frame. This is the candle which will be closing tomorrow, the 15-day candle. So far, it looks bullish, moderately bullish. However, I'd like to see, or if it meant for a strong reversal, I'd like to see a much stronger candle, like a bullish engulfing or complete bullish engulfing, closing above the high of this candle. Well, it's still possible for Monday, but we would be looking closely. If the candle closes like this, I think it's not gonna be enough for a reversal. We would still need to see a confirmation, something that happened here in July. But today we have a slightly different technical map, and the support is still with bears on the technical side. Now let's talk about Elliott waves. So this is the chart that we've been tracking for a while for Dow Jones. This is, I think, the latest. We have a latest edition on April. Since then, Dow moved into our target area, and right now it is struggling to get a direction, clear direction. Very similar path for the one that Nasdaq formed. The only question that I have right now is whether this wave down, the first wave down, was an impulsive wave, like I outlined here in the blue path, 1, 2, 3, 4, 5, or it was a corrective ABC. So it's not very clear at this point. So basically both counts make sense at this point. The wave up here has been corrective, unfortunately, but it's corrective. And I would be looking for a strong move downward for either blue path, which could be a wave 3, but this is of a low probability. The higher probability is wave A, B, C in red, and another potential here that wave alternative B here is complete, and we would be looking for another wave C, which would be comparable to the size of wave A, and this would be the most interesting ride from that perspective. If we look at the short-term frame, oh, this is transported, no, this is the short-term frame. So this is what we discussed on May 8th. Potentially, Dow Jones formed an impulse here, and similarly to Nasdaq. And so far, this wave has been corrective, but it's slightly different from what Nasdaq did. So this could be wave 1, 2, and this wave down is an impulse, and it could be an impulsive wave already, which could be wave 1 of a bigger impulse down. So this potentially could be wave 2 somewhere here, because this wave has been corrective also. I'm looking for this perspective, like wave A, B, and C. And if we see this type of pattern, then we might be prepared. We may need to be prepared for the next wave 3 of 3, which would be quite a wave. Or it could be also wave 3 of C. If this is if we talk about wave A, B, and C correction. So far, this is an interesting development, and it's aligned with Nasdaq, but it's slightly different, as you can see. Nasdaq is looking for potential ending diagonal, and Dow Jones is more direct here. Well, that's the Dow Jones, and now let's talk about Dow Jones Transportation Index. So I'd like to start with the candles first. So this is the daily closure, and the candle is not very clean. We need to see a confirmation for either way, up or down. On a 2-day frame, it's practically bullish. However, if we start looking at the weekly, it's not entirely bullish, and it's in the similar with the similar conditions that Dow Jones and Russell. If we look at the larger frame, for example, this is a very concerning move by Dow Jones Transportation, 2 months frame, and a very strong tower top here. If we look on the daily, on the monthly, it's also formed a monthly continuation candle. So the larger frames are strongly bearish. This is the long-term chart that we've been discussing since, well, since November, I guess. Yes, since November, when we called the top for Dow Jones Transportation, saying that it's planning to move to this rectangle. Right now we see that it is close. It's already hit the level, the minimum level. However, as the wave upward is corrective, I would be looking for another wave down, and ideally from Elliott Wave perspective, it should be around 11.850 for an ideal structure. In other words, it should be below the September 2022 lows. And this is the bigger frame. And if we look at the smaller frame, so this is the current wave that Dow Jones Transportation is forming since the beginning of April. The wave has been corrective. We have a wave A, wave B, and wave C is shaping as an ending diagonal. This is very similar to what we just saw with Nasdaq. And if this hypothesis confirms, then we see an immediate drop of about 8%. And I would be looking for lower prices from here. That's Dow Jones and Dow Jones Transportation. So if you found value in how we track the turns before the crowd catches on, this is the time to subscribe. We are building a community of traders who rely on deep technical signals and not headlines. For those who want more than just a video, our ultimate subscription includes full written access to market setups, wave charts, and high-level strategy across all major instruments. If you are serious about timing and signals, this is where to go. Email us at help@investingangles.com. Let us know your country and we'll send you a custom discounted offer. And big thank you to all of our recent subscribers. Last night we hit 25,000 mark on YouTube. This is an amazing achievement, and I would like to thank you, all of you. Thank you, thank you, thank you. And now let's move on to S&P 500. This is our charts. Similar situation for S&P, which formed a bearish engulfing over a doji on Thursday, and I'd like to say that S&P, I think it is the worst case for the weekly closure, because it again had a chance to confirm a bottom by closing above this level, but it failed and failed again for the second week in a row, and this is already a growing concern. So now the weekly frame features a Harami Cross, bearish Harami Cross, and if we see a strong move down confirming it, it wouldn't be a surprise at all. And one more data point on that 8-day frame, which closed on Friday, S&P 500 possibly formed a very classical falling three methods. A red candle, huge red candle, three smaller candles within the body of the red one, and now if we get another red candle downward, this wouldn't be a surprise. Well, that's a classical setup. Now let's move on to Elliott Waves. This is the chart that we've been tracking since April 22nd, and it's not changing at this point. We can see that right now S&P 500 ideally in the target area, and if it falls from here, well, it would be either red path, like a completing wave C of the entire correction, or we might see an extended correction ABC, like I outlined here in purple. That's the perspective. If we look now, if we compare S&P, Nasdaq, Dow Jones, and Russell together, we are seeing that three of them formed bearish engulfing candles, and only Russell is somewhat bearish neutral, which requires a strong confirmation. So I would say the chances for a red Monday are significant. Let's see what happens. Now let's take a look at some technicals. This is the chart we're tracking, MACD monthly chart, that we are tracking since the beginning, or since March, end of March, when we said that S&P 500 is about to form a MACD bearish cross of a record magnitude, all-time high, and it's been like more than 10% higher than the previous one. And we did some analysis, statistical run, and this was our target at the time. We said that S&P has all chances to return to 4,300 in the next couple of months. So far, it's been halfway there, now strongly bounced. Let's see what happens next. So far, the technicals support a move down. And if we compare the crosses across all four indices, we can say that all of them are in the same boat. S&P 500, Nasdaq, Dow Jones, Russell is slightly different, but it looks like it is leading the pack right now, because Russell in April it formed a 2 months bearish MACD bearish cross. So far these the other ones are just leaning towards it. Let's see what happens in June. At the final chart here, I'd like to also have a look under the microscope at the current wave. So this is how we left it on May 8th. potentially it's been developing an ending diagonal, and this wave could be an impulse here. So far the waves up has been corrective, and I would be looking for maybe extended wave 2, because this wave down is not as clear, and I'm not sure about its impulsiveness. So maybe we should see just a little bigger wave 2 before the next move down. Whether it's going to be wave 3 or wave A of a slightly bigger correction, it's not known at this moment. But if we consider all technical elements and all technical support, I would say that this would be more suited for wave 3. So this is an ABC potential formation. Well, that's the perspective for S&P 500. And as the feature of the day, I would like to discuss two large caps, Amazon and Google. But before we go there, if you're one of the returning viewers, thank you. You already know the value of staying ahead. Let's make it official. Hit subscribe. Now let's talk about Amazon. The candles. So the candle on the daily frame is somewhat neutral, potentially bearish. No very strong concern here. And if we look at the weekly frame, it's also potentially a bullish closure for Amazon. However, the bottom is not confirmed yet. It needs to close above this line. Let me chart it here. So it needs to close above the high of this candle in order to confirm a bottom. However, on the 8-day frame, it's similar that we just discussed for S&P 500, and this is potential setup for falling 3 methods, and I would be paying a lot of attention to it. So the next 8 days could be very significant for Amazon. Now let's have a look at different charts. So this one we've been tracking since early February, when we said that Amazon had a very all chances to form an ending diagonal. This is what happened after, and this is when we outlined this target at early March. So far this target has been hit nicely, almost in the middle, and I would consider this as wave either 1 or A. And today we haven't updated this for a while, so May 11th. So this is what we are seeing right now. So this could be an impulse down. Most likely this is an impulsive wave. This wave is clearly corrective, and I would be looking for this particular pattern. It can extend a little higher, but so, and this could be either wave B or wave 2. I think that from Fibonacci perspective, this would be an ideal target for this wave. So it might need to move a little higher to make this kind of ideal flat. So it could be wave, by the way, it could be ABC or WXY because of the structure of this wave. So it's not clearly impulsive and neither a diagonal. So it could be a diagonal, but it depends on how it forms the next one. But nevertheless, the very first wave is corrective, obviously wave B, and wave C or Y. And this would be the next move for me here. So Amazon would move further down. Now let's have a look at technicals. this is what is happening. And we discussed this in early April, saying that Amazon formed a MACD bearish cross. Now it is official, and it completed it in April, and today is May. And our projection at the time was that Amazon can move somewhere in the range of lose about 30 to 94% of its value, and with the average decline based on statistical estimates about 51% is here, 115. So this is the upper boundary of the range, and this is the lower boundary. So it's already been there, 30 something percent. But the structure so far points that we might expect more losses down the road. Let's see how it develops. And the final chart for Amazon, I'd like to point this. This was our famous amazing call on February 4th when we said that Amazon is going down. Nobody believed, absolutely, and lots of rejection, lots of disappointment. But anyway, this was our call at 244, 0.6 on February 4th. And since then, Amazon moved exactly into our area, 162, 143. And based on this particular wave, based on this recovery, I'm highly skeptical that it might fully recover from here, and I think we might see a wave down. So far, let's see how it forms, and if we see a strong reversal pattern, then we would be able to outline it further. That's Amazon, and now let's talk about Google. So Google, from candles perspective, is much more concerning than Amazon, and this is why. I'd like to say this is the weekly candle structure. A very strong bearish closure of the week, inside down candle, and if we look at this chart from the classical pattern perspective, we might notice this structure. So this is, let me make it slightly bigger. So this is a potential bearish flag, very nicely shaped. So if it is indeed what is happening, then I would be looking for a significant move down from here. So this, not this way, let me do some quick estimates here. So this would be the target. I think that Google will be set to revisit these levels based on patterns. Well, that would be my estimate here. Well, let's see what happens next. So far, the candle closure on the daily frame is far from being healthy. And if we look at the 15-day frame, which is closing on Tuesday, well, it's not bullish or bearish yet. So far it is neutral, but if it moves a little lower here, it will be bearish. However, for a strong bullish recovery, a much stronger rally is required here. So that's and this chart is the short-term one that we discussed earlier, starting in February. We can also see that the very rather clean impulsive wave down, which I marked here as wave A of a bigger move, and now I would be looking for either wave B completing here, depending on the next move, and but this wave B could also extend here. So far, this particular wave has not been impulsive, and I would be looking for a repeated move here. Well, that's the short-term perspective, and if we look at the larger term perspective, this is the chart that we discussed way back in February, saying that Google also formed a very nice ending diagonal, and now it's time for it to explore lower levels. So far it hit our target nicely, and it's forming a corrective wave upward. You can clearly see here it's most likely a bearish flag. Once it is complete, we would be looking for a move down, and we already have an estimate for this. Well, that's all for today, and let me summarize it. So if you are still watching, you already know technical precision beats news-based guesswork. Volatility sent a powerful signal on Friday, one of the cleanest fail setups we've seen in months. The implications? Massive. The US dollar is quietly reclaiming strength. The foundation is set, and the momentum is rising. Bond yields are bottoming, and TLT is flashing red across multiple frames. If you haven't aligned your outlook, now's the time. Canadian 5-year rates, a heads up for our northern viewers. A shift is likely brewing. Dollar yen continues to lead bullish with strong candle support. Baltic Dry Index, the canary in the global trade coal mine. What it's showing now could reshape long-term expectations. S&P 500, Dow, Nasdaq, and Russell, each index has a story. We map them across multiple timeframes to keep your strategy aligned. Amazon and Google, this week's spotlight. Are these bounces part of a healthy trend or just technical noise before the next leg down? We covered it live and with data. Want a full suite of Elliott Wave roadmaps, annotated candle charts, and long-term outlooks? Head to investingangles.com, your no-noise, high-precision market resource. Subscribe and don't miss what comes next. And big thanks to all our 25,000 subscribers on YouTube. This is a huge milestone, and we are going to celebrate it. Share this episode with your trading network. Reddit, Discord, X, Facebook, wherever the sharpest minds gather. Like the video if it helped sharpen your edge. At Investing Angles, we don't follow. We forecast before the crowd even blinks. See you in the next one.